You're one of the few Africans who has successfully raised millions and millions of dollars for investing. How did you do it?
Never take no for an answer.
I love that.
Intentionality is key. There is no such thing as you put money into Kenya or Burundi and then automatically there's social return. No.
Really?
No.
Access to data is a challenge in Africa.
People don't disclose exit. And you know what that means? For the investor sitting in Europe or the US?
We assume there are no exits.
Which is a lie, which is a myth.
That's the question I'm always asking.
The piece that's constantly missing is an incentive.
The tax man.
The tax man, yes. Who has just made people so fearful?
We're paying a price.
It's insane.
So welcome to the Doers Defined podcast, where our mission is to amplify emerging market heroes bringing positive change. And today, I am incredibly delighted to have my dear friend, Kanini Mutooni, as our guest today. And I think, Kanini, I should start by saying that you have an extensive background in finance and social impact. And you're currently the Regional Managing Director, Africa, of the Draper Richards Kaplan Foundation, which is a venture philanthropy institution focused on investing in early stage entrepreneurs creating impact. Kanini also serves as the chair, or serves and has served as the chair or board member of several organizations, including Imagine Worldwide, Britam, FSD Africa, Vodacom Tanzania, Mastercard Foundation Growth Fund, the Global Innovation Fund, among many others. Kanini has also held leadership positions at organizations such as Toniic, a global action network for impact investors with over 300 asset owners representing close to $16 billion in investable wealth, and the USAID-funded East Africa and Investment Hub. So, Kanini, that's an impressive resume. I think this is the first time I've actually had to read out, just because you've done so much. So, let me start by asking you, you're one of the few Africans who has successfully raised millions and millions of dollars for investing, which is no small feat. How did you do it?
Well, firstly, thank you for having me. This is an amazing, amazing privilege. Elsie, this is just fantastic to be here. And when you started reading the whole resume, I thought to myself, oh my goodness, too many things. But I think maybe just to say, I do live with a sense of urgency. And that's why you find I'm involved in so many things, because I believe that's how I'm going to make a difference on this earth. And that is how I will build my legacy. So that half explains all those board roles and leadership positions. But to your question, Elsie, raising money, I mean, this probably will take a couple of hours to talk about, but I think there's a certain approach that you need to have when you go out and raise money. But at the same time, we also have to accept that there are privileges that some of us have that others may not have when it comes to raising money. And maybe we can start talking about that. And that is access to networks. And it's what I call social capital. Okay, the advantage that I bring is that I've lived across the US, I've lived in the UK, I've lived in Africa. And with all those sort of different global roles, I've been able to build relationships. So it's just so much easier to pick up the phone and say, my portfolio company needs to raise $1 million or $500,000. Let's talk about it. Or send an email. If you did that as a cold call, it likely would not be successful. So I think that's one thing just to put out there and make it clear that social access, social networks is a core part of raising money. And because of that, Elsie, I do make sure that I do a lot of introductions for my portfolio companies and for women that I know who are raising money. In fact, with Roseanne, just as we were talking, I was like, I have 2 contacts for you. I'm going to connect you to both of them because I know she's raising her fund. So I'm constantly doing it. It's part of my DNA because I know I do have that advantage. Now, the other thing about raising money is about widening the pool. And this is all about having a pipeline of people to talk to. And sometimes it's a bit daunting when you have a list of 40, 50 names of individuals, funds, family offices, development finance institutions that you have to talk to. But I think for me, the wider the pool, the higher the probability of actually narrowing down to one that will end up deploying capital and being successful. So maybe that's one thing for the entrepreneurs listening, that the wider your pool, the higher the success rate. And don't have a list of 5, because if all 5 say no, then you end up with nothing. Keep widening that pool so that when you have a no, you have a backup. And then the other interesting thing, Elsie, the third thing is never take no for an answer.
I love that.
And this is how I see it. You might ask an investor for capital in, today, and they say, no, actually, this doesn't work. It's not our fit. Let's keep talking. Or they say, no. Go back to them after 18 months. You'll be very surprised. Investors change their thesis. They change their focus. Sometimes they even change their ticket sizes. So what I've learned is that even if a potential investor has said no, I say, look, let's just have regular catch-up calls. Once a year, twice a year. Let's see what you're up to. And then, we'll see where the conversation lands. That has actually ended up in some very successful transactions. So, I think as human beings, we feel shy when somebody says no, and you feel, I'm not going to disturb them. But you'd be very surprised. Having continuous conversations ends up opening doors that were previously closed in the past. So those are like my top 3 ones for now, but I'd love to talk more. But
and then
yes.
How long does it take you to raise capital when you're in the process of doing it?
Loaded question. Okay, so I'll give you an example of my latest pool that I raised for DRK Africa. It took me 5 years. And 5 years feels painfully long. But honestly, when I really think about it, it actually wasn't that bad, because I was dealing with a new brand of organization in Africa, because DRK has been investing in Africa, but was not a well-known brand. Well-known in US and in Europe, but Africa, it was still, a relatively newish impact investor. So there was a lot of work I had to do around promoting the brand, showing the portfolio companies that we've invested in, showing the impact, showing that, the couple of exits that we've had, to make sure that people understand we're investing for good and we're also investing for returns as well. So that building up took quite a bit of time. And of course, I wasn't doing it on my own. I had to build a team, personal board of advisors. So, 5 years, people might think, oh my gosh, but it's actually not a long time to build from scratch, to, get the contacts going, to take the no's and the yeses, and then eventually to get some money through the door. But if you ask me, I'll do it again happily, because I've learned so much.
Oh, wow.
So much over those 5 years.
And this is why it was so important to have you on the podcast, so that people could also draw from that expertise and hands-on learning as well.
Absolutely.
So I wanted to go into some of the work that you do. And ask you, what was a pivotal moment or personal experience that made you decide that you wanted to empower African entrepreneurs and also build sustainable ecosystems?
So Elsie, it wasn't like one moment. I think it was like a series of events that happened in my life. So I was an entrepreneur before in Berlin. Post the financial crisis, I left my investment banking role in London, moved to Berlin to set up a startup. It was a SaaS tech platform. I had no experience in tech, so I hired a co-founder, or to be honest, I put an advert in the newspaper for a co-founder because I didn't know anybody in the city. And I actually ended up finding a fantastic co-founder who really worked with me to build this startup from scratch. And, when entrepreneurs ask me, Kanini, I need a co-founder, how do I find one? I'm like, you can put an advert in the paper. But, we all have our methods. But I think just a lesson there, your co-founder doesn't necessarily have to be somebody that you have known since you were a child. It's all about, what are you looking for? Okay. Can you gel with this individual? Do they bring to the table what you need? And can you work together to build this vision and this dream? So mine ticked all the boxes. So I think being a founder in a foreign country, not even speaking the language, having to advertise for a co-founder, I constantly felt I was alone. And even after raising capital, it's almost like you raise money and the investors put the money in, and then they're like, okay, let us know how things go. I never felt like I was on a journey with my investors. And as I did it, I thought to myself, if I am struggling as a Kenyan in Germany with all these networks, can you imagine what happens to the local entrepreneurs living and working in Kigali, in Bujumbura, in Nairobi? And that was when I started to really think about, what role may I have in my life or in the future to help other entrepreneurs so that they don't go through the what I call the loneliness of being an entrepreneur. So that's where it began, Elsie. And, there were moments I would cry because it was just so hard. And then I had my 3 children. I got married during that period, that 5-year period when I was running this startup. I had my children. And one thing, Elsie, I'll disclose to you is, at the end of that journey, when I decided to exit from the company, it wasn't because there was a fantastic offer on the table, or I felt like, my co-founder and I had achieved everything. No, I was just exhausted.
You're burnt out.
I was completely
and we all
exhausted.
know what that feeling.
Yes.
Yeah.
And if I wished at that point I had investors around the table who would just be like, Kanini, you know what? Take a sabbatical, or take a break, or bring in a number 2. That, for me, there was nothing. And I felt, you know what? I'm just going to pull myself out, me and my 3 children, and just get a rest, because I can't do this anymore. And I look back and I think, if I had waited, I probably would have had, a ton of money, to be honest. But I had to do it because, my health came first. So it's things like that, as they were happening, I kept saying, oh my gosh, if this is a struggle for me and I have all these resources in Europe, what is it like for an entrepreneur on the continent? So that's where the thought process started.
I can empathize. I hear it, right? Because I think that's the question I'm always asking is, what am I doing with the privilege that I have?
Exactly.
And I think we mentioned that this podcast was one of those tangible things that I could do. And I think hearing that experience, then how has that altered the way you lead? How have those experiences altered the way you lead?
Great question, Elsie. So as an investor, I have a very different approach. So at DRK, we pride ourselves in walking on the journey of an entrepreneur, an early stage entrepreneur, from beginning to end. So we don't just invest, we join the board of the companies we invest in. We help the entrepreneur do a talent strategy in terms of, who do I need to hire to get this organization to the next level. We work with entrepreneur to do a scale strategy, understanding, what do I need to do to grow this company, over what period, over which markets, what do my unit economics look like going forward? All the hard stuff that, to be honest, not enough investors are doing. And whenever I do these things, I keep remembering my journey as well. Yeah, this is exactly what I needed. Oh my gosh, there's somebody here who's actually helping an entrepreneur choose their board and set up their board.
I know the person.
Yeah, exactly. So one of my dreams, and I know you'll ask me this question later, is I just wish there were more investors in the market who had the type of capital, to be honest, that we have, that allows us to do this hands-on, long-term work with entrepreneurs, because I think that's what will add real value for entrepreneurs on the continent. So right off the bat, that's why I'm a different type of investor, because of what I went through.
So just brilliantly said. And I think what it echoes is just your understanding of what is actually needed here. So let me ask you this. How do you think the African investment ecosystem is different from some of the other places that you have operated, worked in, vis-a-vis the US, Europe? What actually makes Africa unique?
Yeah, one with so many things, Elsie. I mean, one thing right off the bat is that there's so many gaps, innovation gaps, I feel that we have that could be leveraged and exploited by smart entrepreneurs. That, to be honest, in Europe and the US, those gaps just don't exist, right? So, I mean, when you think about M-Pesa, the thing that we all use every single day, whenever I travel to the US and my colleagues are seeing me like paying bills, water bills on M-Pesa, they're like, what? You can do that sitting in San Francisco?
Yeah.
I'm like, yeah, I can pay salaries. So I think the fact that that gap was there and there was the innovation came that made it happen just tells you, I think there's probably quite a few other gaps as well that exist, here in the ecosystem that entrepreneurs can take advantage of, right? And make it happen and create growth and create profit and to do good. That's one thing. Now, there's also a negative thing to keep in mind about the ecosystem, Elsie. A lot of our capital comes from outside. And the problem with that is we have a lot of investors who actually don't even have the context of what it is like to live and work and experience the problems that are being solved by entrepreneurs, right? And I think there's a problem there, okay? Because when you invest without context, you may be pushing an agenda that is actually not appropriate for a particular entrepreneur. And that is why I moved from London and came back home 3.5 years ago to help DRK set up an Africa base where I could see entrepreneurs every single day, live and understand the problems that they're solving and not just fly in and fly out, and just have a completely clear contextual understanding of what's happening on the ground. So I do think that's a major element of the ecosystem here that I've got to just sort of put out there. If you're going to invest, you need to live here, you need to understand the context, and you need to live the problems that are being solved by the entrepreneur.
So let me ride on that and ask you, what are some of the biggest misconceptions that you think international investors who are not on the continent have about Africa?
These are the ones that keep me up at night. The one I hear constantly is the corruption thing, which it kind of makes me really angry, but at the same time, I understand where investors are coming from. There's a mindset that you can't trust entrepreneurs. There's a lot of corruption, when you're dealing with government. You can't do anything in the country, without paying anybody a bribe. Now, to a certain extent, that may be true. But if I was an investor coming from outside, what I would say is, let me find entrepreneurs who have such strong integrity, right? That I know without a doubt, I will always be able to trust them with the capital that I'm giving them, that I'm investing in them. And those entrepreneurs are there. They just need to talk to us local investors.
It's actually
we tell them.
The conversation I was having with Ken Njoroge, who said that I was determined not to pay a bribe and went to government offices for almost 2 years.
Amazing.
So that grit. So I hear you when you say that there are many entrepreneurs within our ecosystem that want to uphold just the highest ethics in how they go about that. And let's tell those stories.
Because the stories that keep coming out that they read on Bloomberg, on the Wall Street Journal, are about the ones who didn't do those things, right? So maybe we also have a role to tell those stories as you're doing, Elsie. Let's talk about those entrepreneurs who, beyond the difficulty, have not fallen in and bribed and done things that go against strong integrity and strong values.
So besides, I think, telling these stories, what else do you think we should be doing to alter that narrative as well? And it's actually on a previous podcast where I mentioned I was in a meeting room now that I'm spending more time within the GCC. And somebody whose voice is incredibly influential, when I asked why they're not doing more investments in Africa, actually said, Elsie, fraud is loud in Africa. Now, I was in the room perhaps maybe to share stories, to share examples of people that I know. but I'm not always going to be in that room, or you're not always going to have somebody who's operating within the ecosystem or who knows Africa well in some of those rooms. How do you think we should be altering that narrative from your viewpoint?
Do you know what, Elsie? I think we should be in these rooms. That's why I have such a long resume. Honestly, at the back of my mind, when I get calls like from the Global Innovation Fund, which was like the first impact vehicle with 7 countries as shareholders, massive, undertaking. I said yes, because I want to be at that table when the US has put money in, Australia put money in, the UK put money in, and it was going to be basically to invest, do good, and create returns. And I said, yes, I want to be at the table. Now, you cannot be at every single table, LT, but I do think there is something that we need to do there, because I do know a lot of women who say no because of the fear. Yes.
Really?
Because of fear, because of the risk. Even when I took chairmanship of the Global Innovation Fund, I know a lot of my friends were like, Kanini, are you crazy? This is huge.
But what's the underlying reason besides being huge? Is it imposter syndrome? I'd really want to understand.
Fear of failure.
Fear of failure.
And then being the one that's carrying the cross of every single African female who's tried to do this and then has failed. And, I did think about it, because I was going through a really serious time in my personal life when I was asked to do this role. And I weighed the pros and the cons, and I said, you know what? The pros outweigh anything. I'm going to do it because I need to be at that table and I need to have a voice. So that's where I think maybe we could do a bit more, is making sure we are at the table and we have a voice to say the things we need to say, just as you had that opportunity. Yeah.
But I think also when you're isolated, I think it makes it a lot more difficult. And I think you feel like you're carrying that burden on yourself. And this is why I kept saying that even with this Doers community, being able to see Kanini and know that she took on that responsibility and did it well, that somebody could actually reach out to you and say, how did you go about it? How did you do it, right? And so that not only are we amplifying those voices, we're also increasing the number of people who are willing to go into some of these rooms.
Yes.
So I think I hear you. I really, really hear you on that.
And just to pick up on that, Elsie, the whole idea of people reaching out and saying, how did you do that? Maybe that's another call for action, because people reach out on LinkedIn and ask me questions. And, you look at all your messages and you're like, oh my gosh, I have a million things to do. Wow, do I have time to do this? But I always take time, even if it's a few seconds, just to respond and help somebody and say, you know how I did it? XYZ. If you need help, these are my details. I usually say, I'll give you 30 minutes if you're clear about what you want. And that usually filters out a lot of people because they don't know what they want.
Yeah, that's actually true.
Yeah, 30 minutes.
True.
If you tell me beforehand what it is you want and put bullet points, and I'm just communicating on the, the messaging system on LinkedIn, right? So they're not on my inbox anymore. Those are the opportunities to be able to help, as you were saying, people understand what it took to say something, what it took for you to be in the room, and then just sharing your experience. Very small, but very effective. Very effective tool.
So then, with all this experience, if you could change one thing about the Africa investment ecosystem as it is at the moment, what would that be?
Just one thing?
Or two?
Okay, I would say my top one, Elsie, is I know there's a lot of capital here. There's a lot of capital from wealthy families, from CEOs, from leaders in organizations, from inherited wealth. And what I would love to shift is to have some of that wealth going to social entrepreneurship. Because unfortunately, what I'm seeing right now is social entrepreneurship as an asset class is not as popular as it should be. And in my mind, I think this is how we're going to create the next generation of wealth. When we really invest in our early stage entrepreneurs, we're really focused on solving real problems. But I talk to a lot of families here and it's, we'll put our money into real estate, or we will buy a new block of flats, or, now it's, we'll buy a yacht or an apartment in Dubai. I think all those things are fine, but let's have an allocation for early stage entrepreneurs on the continent, because I know it's possible. That for me is my dream. And I think what I'm encouraged by is that now quite a number of angel investors around that I meet just socially. And I'm really curious when somebody says to me, yeah, I put 20K into a startup. I'm like, wow, why? What drove you to do that? What are you expecting? How are you helping them? So it's happening gradually, Elsie, but I think more work needs to be done there. So that's the one thing, if I had a magic wand, that's what I would change.
So just following up on that, then do you think it's a lack of perhaps exposure to some of these other asset classes? Or what would you say the underlying issue is as to why people are not, bold in terms of, trying other ways of making money, creating generational wealth?
Yeah, it could be. I don't know if it's exposure. 5 years ago, maybe, but now I think I wouldn't use that as an excuse. I think what helps, Elsie, I found, is one-on-one conversations. Because sometimes angels are just like, I don't know what a convertible is. I don't know what equity is.
The jargon.
The
financial jargon.
And as investors, honestly, we don't do a good job. We end up isolating folks, right? And these are folks who genuinely want to do something. So what I find with one-on-one conversations, explaining things, and even recommending they talk to one or two other people, that seems to help people on the journey. And it's a long journey. It's not going to happen tomorrow. But I do think the language is problematic in some instances. In other instances, it's also KRA, I have to say, the regulatory
KRA. You might need to define for the audience that does not know who KRA is.
The Kenya Revenue Authority.
The taxman.
The taxman, yes. Who has just made people so fearful of deploying capital in any way that might show that they have undue wealth. That means they have to be taxed. I've actually spoken to a couple of angels who said, if you guys can find a way to make sure that the revenue authorities stay off my back, because I am a upstanding citizen, I pay all my taxes, but if you can find a way, I will be interested in putting money as an angel. And I thought, wow, that's actually stopping people currently.
That is so sad. So what you're saying is we're paying a price, right?
Yes.
For investing or to showcase that you have any additional disposable income to spend into new ventures.
That you haven't paid taxes for. And just to add, Elsie, if you think about how Silicon Valley came to be, think about it. It was actually individuals who started investing. And the US government gave an incentive for these investments to happen. So either incentives on capital gains, the ability to do write-offs, philanthropy as well, huge tax incentive to be a philanthropist in the US. I just feel this is something that the African ecosystem hasn't yet come to terms with. We have a lot of startup builds. I think there's one in Nigeria, there's one in Kenya, but the piece that's constantly missing is an incentive for local investment, for angels to put money into early stage companies. And until we do that, it'll be unfortunate. I don't think we'll move as quickly as we need to move.
I think that's food for thought for me. I actually didn't realize that people were terrified. And I think maybe it comes from a place of naivety for me, because we've been having this conversation. So you know that I'm an accredited investor, but you're an accredited investor because you have exposure, you've worked on Wall Street, you're moving in circles of people who are in venture capital, private equity. So you do have the background and you do have the know-how. But I don't think I appreciated that the mechanisms of investing while you're on the continent without being outside are just not there.
Absolutely right. They're not. They're not. And if we don't address that, I honestly don't think we will be able to change anything on the ground. So we need somebody to join government. That's been my dream, from our ecosystem. Ken Njoroge.
Ken Njoroge, you're being outed here. Was a previous guest.
That. Yes.
So this leads really nicely, I think, to one of the questions, and I think the areas that I wanted to have a conversation. And this is around the impact of regulatory and political, and what a significant impact it has on investment decisions. So what do you think policymakers should be doing to incentivize investment decisions? And I think the first one that we just talked about, again, is the taxman issue and ensuring that you're not crucifying people for, diversifying sources of investments. But what are some of the others?
I mean, one that I've been thinking about and I've been talking to people about is a very simple one. If you invest in an early stage company as a local investor and it goes badly, and we know 70% of your portfolio will go badly.
Naturally.
You should be allowed a certain amount of money to write off. Now, this is something that's offered in Europe, yes, and in the US to a certain extent. And the reason I say this, Elsie, is that it'll incentivize investors to put money into places they may not necessarily feel comfortable with, which is obviously early stage companies, but at the back of their mind know that, okay, if this does go wrong, at least I have a write-off on my tax return. Now, this is going to take a while for the regulator to even understand. And that's why I keep saying to you, if we had somebody from our ecosystem having one-on-one conversations with the government, with policymakers, this would actually make a lot of sense. Because if you do the math on how many people get employed when a startup grows and scales, it's insane. It's insane. So there's actually direct benefit for the country because of these early stage companies. But the government needs to be able to see that and just create an incentive that if things go wrong, you can actually write it off on your tax return.
So give a little to get a lot.
Exactly. So that's one thing, we'll see. Once Ken Njoroge gets into government, we'll see how that goes.
We'll be calling him after this to say, hey, you got a new job.
Yes.
And then, so this is so interesting because I think you have been more in the ecosystem. So I'm listening to this and I'm like, aha. But then the other thing is also data.
Yeah.
Access to data is a challenge in Africa. And oftentimes it's not there. And I know even in my own industry, very often you're thinking, how did they make that decision? That was a complete black box. So how do you as an investor make decisions to deploy capital without adequate data?
Gosh. I mean, Elsie, this is such a strong, important question. And, I'll answer it and do not judge me. But I'll just give you a quick example. Like, I think it was a couple of weeks back, we wanted to sit down and do a mapping of exits that have happened on the continent within a certain sector. Just that, exits. Early stage companies, maybe who've got to almost mature stage and were able to sell either through a merger acquisition or through a strategic investor. Black box. We couldn't find anything. I think maybe we found one or two that had been disclosed. But what came out was that, sorry to mention the taxman again, there's also an issue around disclosing exits because the taxman has been talking about taxing capital gains as well. So people don't disclose exit. And you know what that means for the investor sitting in Europe or the US?
We assume there are no exits.
Which is a lie, which is a myth. And I realized that a couple of months ago. I was like, oh my gosh, there are exits. But you know how you find out about them? One-on-one conversations on the conference circuit with other investors. That is why, to be honest, in October, I think I traveled probably 70% of the month. Just going from conference to conference, meetings to meetings outside Kenya, but within the region and outside, and just having those one-on-one conversations to get the information that we need to be able to deploy capital and to have some idea of what's happening. But if you're going to go and look for data and reports, it'll be a struggle. Now, I do have to say, people like Brighter Bridges have set up, it's a startup. I think they set up maybe 4 years ago, and they're working very hard to create data sets for the continent. But I know this is still growing. I know they also have to have a business model around it. It can't be public good. Of course, they have to charge for it.
Yes.
Yeah, up until then, Elsie, I have to say, for me, it's one-on-one conversations, getting on a plane.
Yeah.
Yeah.
So there's a lot. So I think, what are some of the ways that you think that we can improve this issue of data? So yes, there's,
Yeah.
folks like Brighter Minds, but what other ways? Where can we be putting money? Perhaps that's a whole new business that could be a unicorn,
I think
because
so.
every single
Actually think
entrepreneur
so.
has the same issue, right? It's a black box for those of us who are on the continent. It's a black box for those who are outside. So how do we go about it?
Actually, somebody talked about this on one of my trips, and they said, can we have a startup to set up a company that just does data? And I was like, there is one. But as I said, I think there has to be a really strong business model. And actually, that investor was saying, can we start a pitch book for Africa or a Crunchbase for Africa? And I thought, you know what? That's actually what we need. That's what we need, because if you go to Crunchbase now or PitchBook now, I mean, Africa is just like a second
It's a sliver
thought.
or a carta for the people who,
Carta. Exactly. So honestly, I think that's the answer. I think, and maybe that's about working with entrepreneurs who have this idea, who need capital to do it, who need the support to do it, to make it happen, and then fund them and invest in them. That's the only way this data problem will be resolved. I honestly don't think this word of mouth thing that I'm doing is a sustainable way to. What if tomorrow I'm under a bus?
Yeah, all that knowledge.
Everything goes.
Yeah, everything goes away. There's I think one thing that I think is quite interesting, because I have dabbled in and out, I think, through board positions within the public sector. Or as a result of being in energy, you're given access to some of the information that is available within public sector. And I have to say, Kanini, I have been blown away. I think that's the right word. Blown away by the amount of data that sits behind the screen without the know-how of how to turn that data into something that could be used to incentivize investments. So if I was going to answer that question, it's how do we incentivize that we are walking hand in hand, public sector and private sector, to provide access to this information so that we can bring more dollars and grow our own ecosystems.
That is such a great point, Elsie, because one thing I've also been thinking about is the fact that data analysts, data science as a profession, as a qualification, is something that needs to grow on the continent as well. Because, you could have access to a lot of data, but data is meaningless if it's not sort of chopped and controlled and directed to the
contextualized.
People to the people who need it. So I do think there's a skills and competency thing there. And our young people these days are so smart. I mean, I just wish we had more universities offering this, level of qualification. When I did accounting, everybody was doing accounting, right? Now I wish data science could be the same thing, that everybody is doing data science. So we have hordes and hordes of individuals who are actually able to push data and cut it and chop it in the right way so that we all have access to it. But, government has a role. I mean, I didn't know that. You will
be amazed. So when the Ken Njoroge gets into power, maybe one of the roles will be, how do we incentivize? Because it almost feels like we're misaligned, which is not really the case. We're really batting on the same team.
So interesting.
And so that's maybe one area, I think, that as an ecosystem, and those of us who do have access within public sector, how can we have those conversations to showcase that there is value in sharing that information and putting it into something that could be used? Yeah. Love this conversation, by the way. And so I think next, is, how can investors balance financial returns with social impact? And how important is that balance to you?
Okay, so I actually teach this course. This course, yeah. So it takes quite a few, modules to get round to the answer. And I'm not even sure if there is an answer. But, Elsie, every investor is different, right? There are some investors who don't really care about social return. And there's absolutely nothing wrong with that, right? Let's just put those investors aside who just do not care about social return and they're just focused on a financial return. The second thing to keep in mind is I hear international investors, when they talk about investing on the continent, they say any dollar that you put in emerging markets automatically is impact and social return. And I'm
Really?
like, yeah, I've heard that. And I'm like, no, absolutely not. There's no automatic social return. There has to be an intention when you deploy your financial resources around creating the social returns. I think that's just a very important idea to put out there. Intentionality is key. There is no such thing as you put money into Kenya or Burundi and then automatically there's social return. No. You can make investments that actually cause harm in emerging markets. Yeah, absolutely. We know that. We've seen that in so many ways. So again, just to dispel that myth. Then I think the third thing about this concept is there's also different levels of return. Okay. And I don't want to start teaching my course, but what we say at DRK, for example, is that there is at market return, there is below market return.
And can you maybe give us a quantum of what at market? Are we saying, above 20%, just to quantify, I think, for those who might be curious.
So at market return is basically the return that you would make from other asset classes out there. So whether it's fixed income, whether it's private equity, whether it's listed equities, that sort of quantum, so like the average from there is what we'd call at market return. Okay. So basically saying whether I put money into my social entrepreneur or I put money into listed equities or fixed income, the return is going to be the same as, as the other asset classes. So that's the at market return. Above market return goes above that sort of portfolio that I've talked about. So over and above. So let's say at market return is 15%. Over and above that would be above market return, which would be 30, 35, 40%. So I have to say, as a social, impact investor, we don't talk about above market returns because that's not, we know it's not possible to get above market returns and generate social impact at the same time. I think that's just something that we've accepted that will not happen. Okay. So where a social impact investor sits is at market or below market, which means there has to be a bit of a concessional approach to returns. Now, I'll just qualify that, Elsie. Just because you're not going to make a return in 4 years doesn't mean that you're not going to make a return in 10. So there's something here about patience, and they call it patient capital, okay? That first 3, 4, 5, 6, 7 years might be just preserving capital. But if you wait a little bit longer, that investment might start to generate return. So that's why I say this is a conversation where you can't just say it's either A or B. There's a time horizon as well. So for you as an investor, Elsie, how much time do you have?
Not much time at all. I even underestimated just even the time with putting together a podcast. That's what we were saying. Everything that you commit to because you want to do it well takes time.
Especially on the continent and in emerging markets. So I think for me, the underlying concept here is let's focus on patient capital. Let's focus on not having a sense of urgency in terms of when you want the returns back, right? Because I think the longer you wait, the more patient you are as an investor, especially on the continent, honestly, the bigger return you'll have at the end if you've selected your investments in an intentional way.
Love that answer. So then what advice would you give to new investors who are perhaps eyeing Africa as a destination for their capital?
New investors who have no idea?
New investors. Yeah. We're in a room because we're constantly being asked, where would you deploy, right?
Exactly.
What would you tell them?
First, you don't call Africa Africa. There are different countries on the continent. It gets me a little bit riled. There's more than, it's not one country. There's different regions, there's different currency, there's different macro situations to think about. So I think that would be the first thing. We're talking about Africa. Let's contextualize it down into country, right? And in terms of the political situation, let's also contextualize it as well. Not every single country in Africa is just about to go into war. Yes, there is political risk to think about, but if you start to break it down, Elsie, you'll just realize that it's probably, I can probably count them on one hand, like the countries would say are post-conflict or near conflict on the continent. It's not that bad. But unfortunately, those countries receive a lot of international media attention. And then investors see that and they assume it's the entire continent. So I would just say, first things first, let's talk about country. Let's talk about region. Let's talk about currency. Because interestingly enough, if you invest in the CFA countries, the countries that are aligned to the euro, currency risk is very different from what we're talking about in East Africa and South Africa. So this is why context for investors is so important, and the data that you talked about. So first thing, that's what I would say. And then the second thing I'd say, this famous statistic we have that in 2050, 1 in every 4 people on earth will be
African. Yeah. And the workforce as well.
And you and I probably say it in a very we say it so much. I say it all the time. But when you stop to actually think about it, that is a powerful statistic. That if I was an investor sitting in Europe and the US and I hear that, and I'm not making a move to invest on the continent, I think that is like a big mistake. Because we know in Europe and even China to a certain extent, when you look at births and deaths, people are not being replaced at the same level as they're dying. So these populations are not increasing. And then when you hear this statistic and you do nothing about it, my goodness. So I do think that's an important thing. And of course, the age, the demographic, the fact that the average age is 20 years old on the continent, that just creates enormous opportunities for investors here. Now, I think demographic dividend, as they call it, also comes with a bit of risk. Because if our young people are not employed, we know that this is
it's a ticking time bomb.
It's a ticking time bomb.
Yeah.
I know.
And even from a policy standpoint, just with migration, you want Africans to prosper on the continent.
And to stay at home. Exactly. Because this is home. This is where we should be. But yeah, I think, and it's probably not very sexy in terms of the things I've just said, but I think it's data specific, it's context specific. It's also about telling these investors, when you do a return analysis between what you would make in Europe, to be honest, and Africa, there's certain asset classes where it's actually a no-brainer that there's actually more return to be made here if you take on the risks, the currency risk and the political risk. So I think that's what it comes down to. It's giving really strong data indications about why this is a place to invest.
So I also want to understand from you, with all this work, with all these positions, and thank you for braving and I think for paving the path for many of us. What legacy do you hope to leave in Africa investing? And second, what impact do you hope to see in the next generation of investors?
Okay, so I think about my legacy a lot. And Elsie, the way I see it is I have a daughter who's 13. She's Kavenya, and she has a twin brother called Kialo, and then I have an older son who's 15. And when I think about my legacy, I always say to myself, that legacy has to make sense to my children. In the way I describe it, in the way I formulate it, it can't just be some high-level thing that only you and I can understand. So the way I see it right now is my legacy that I can clearly explain to my children that I want to leave behind is that you can be on the continent without any sort of high-level connections to politicians and still make a really big difference on the continent and change lives. It sounds so simplistic, but I think we've been brought up and people have sort of had this mindset that you can only be successful on this continent if you came from a certain type of family, from a certain name, but I want my children to never forget that their mother just worked damn hard.
I love that.
And create a change on the continent. That's it. That's it.
Oh, that's brilliant. And then I think as we're ending, I'm always very intentional about asking, how can this community, and I mean the Doers defined community, how can they serve you in the mission and the work that you're doing?
Yes. Oh, wow. A lot of things. A lot of things. The Doers community. Let's do as much as we can to invest together. Let's make things happen together. Let's not just aim to do things in our little silos, in our little rooms, in our little conferences, which sometimes, Elsie, tends to happen because we're all trying to deal with so many things. So that community feel of doing things together, I really would love us to develop something around that. So whether it's sitting in a room together, whether it's doing a conference, I don't know, whatever it is, let's just do together. And we don't have to just meet at the podcast seat.
or the lunches and the dinners.
Please, or the lunches and the dinners. Yeah. And then the other thing is like the thing that I did with Roseanne. Let's help each other, like pave a way for your other doers. Even if it's just an email, a WhatsApp message, something that you can do, Elsie, that I can do that can help make your life a little bit easier, a little bit better in terms of the things that you're trying to do. And it takes 2 seconds. Respond to the LinkedIn message that's come through asking a question. That would be my call to action for this sort of Doers group to make things happen.
That's a perfect place to end. And Kanini, thank you. Thank you for the work that you're doing. Yeah, as I said, for paving the road for many of us. I think for being brave and putting yourself out there. And just for the fearlessness and for that ambition, because I think so many people who hear you speak and listen and see your journey, you cannot dream to be what you can't see.
Yes.
And so it is so important that you're here, that you're willing to make the time despite a busy schedule, just to share these pearls of wisdom.
This was amazing, Elsie. And thank you for creating this space and this platform. I so enjoyed myself.
Yeah, I had a wonderful time as well. Thank you so much.
Thank you.